Hi everyone, and welcome to a special doubleheader edition of Bits and Bips. I'm Steve Ehrlich, Executive Editor of Unchained. In the first half of today's show, I'm joined by Ahluwalia from Lumida, Austin Campbell from Zero Knowledge Consulting, and Joshua Lim from FalconX. We break down what's really fueling this crypto rally. Is it the infamous debasement trade or something else entirely? We debate whether we've actually reached euphoria, how macro factors are shaping crypto prices, and what risks could be still lurking in the background. Then, in the second half, I sit down with Ryan Yee, former investor at Coinbase Ventures and author of our 3-part series that we posted on Unchained, the Onchain 5. And by the way, subscribe to our newsletter, Bits and Bips, where we delivered all of this content for free. Going back, the Onchain 5 are the 5 companies Ryan believes will play a leading role in bringing the next wave of users into crypto. Ryan shares his insights on how firms like Coinbase, Stripe, Robinhood, Telegram, and Binance are going on-chain in very different ways, and what that says about crypto's next chapter. It's all time-stamped, so feel free to use that as you will.
Aptos is the no-compromise infrastructure for global financial markets. Fast, reliable, and 100 times more cost-efficient than other blockchains. See for yourself why Aptos is the chain of choice for institutions, users, and developers alike at the Aptos Experience, October 15th and 16th in Brooklyn.
Are we actually at euphoria, or is it an octave below euphoria?
But we're in a bull market. All bull markets climb to some degree both a wall of worry and certain levels of optimism. The point at which you know you're at euphoria is when all of the bears have capitulated and we're not there yet.
There is this sort of renewed interest on the revenue meta of investing in crypto, which as most TradFi people just call investing.
Hi everyone, welcome to another episode of Bits and Bips, the show where we explore crypto and macro colliding, one basis point at a time. I'm your host, Steve Ehrlich, High Scribe of the Unchained Kingdom. I'm here with a few special guests. For one, returning Austin Campbell, the High Scholar of Zero Knowledge Consulting, and a new guest, Joshua Lim, who is the High Captain of the FalconX fleets. So welcome, Josh.
Thank you. Glad to be here. I'm enjoying my new title.
Yeah, everyone always appreciates it the first time because they never know it's coming. That even goes for me the first time I joined. So, Josh, before we kind of get into everything, and I have some disclaimers to give as well, but why don't you just briefly share your bio with our audience?
Yeah, happy to be here. I run the trading business at FalconX, which is a global prime broker and trading shop. We provide liquidity across a broad range of markets and also bilaterally directly with counterparties, mostly consisting of hedge funds and venture firms, high net worth individuals. Nowadays, a lot of corporate treasuries as well. Almost entirely institutional customers.
Okay, all right, great. And it looks like Ahluwalia, Maester of Lumida, is joining us. So welcome, Ram. We have a full crew here today.
My favorite people. This is great. We got Josh and Austin together, and Steve. This is amazing.
And I have to admit, I'm really happy to be here with all you guys because I'm on pins and needles about the baseball playoffs, and the Phillies start in an hour and a half, and this is
so we got to distract you for a little.
Yeah, this is, and they're already down 1-0, so this is keeping me.
All right, here I'm going to give you a live look at Steve in about 1 to 2 hours.
Probably. As always, nothing that we say here is meant to be investment or financial advice. For full disclosures, please check out our website, unchainedcrypto.com/bits and bips. And with that, away we go. Josh, let's start with you. You just came back from Asia from 2049 and some other events. Good time to be out there because last week we were here talking about October and whether or not it was going to live up to its reputation. So far, so good. So what were some of the key themes that you saw out there?
For sure. It was pretty exhilarating to be out there. Honestly, it's something I do every year to try to get a good sense of what's happening in a part of the world that I don't normally have a lot of visibility into. And yeah, this year there were a couple of major themes that were emerging. I will say, like, it started off in a pretty rocky way, right? Because a lot of us were out there at the end of September for the Korea Blockchain Week. So obviously a lot of people were positioned pretty long, like going into those two set of conferences, Korea Blockchain Week and Token 2049 in Singapore. Unfortunately, that kind of coincided with like some end of month de-risking at the end of September. So we saw a lot of names, actually get hit pretty hard. I think a lot of people were liquidated on the way down. And then that obviously set up a good base for the recovery rally going into token and some of the major themes there that were emerging. So I just want to call out that there was a little bit of maybe people positioned a little over their ski tips at the end of Sep. What we've seen since obviously has been extremely bullish, and it kind of reinforces some of the things that I learned at the conference. So, one big thing is everyone is sort of all in on this, Bitcoin, to some extent, like ETH and a few of the other majors, Solana, as a way to get away from the US dollar, basically, right? The dollar kind of debasement trade. And in many ways, crypto is lagging gold and equities to all-time highs. And of course, we got it today, right? Bitcoin hit a new high of 126K. And that, was a long time in the making. And it really took a lot of maybe even like geopolitical kind of wobbles to get us there, including some of the turmoil overseas. You had the Japanese elections and the French prime minister resigning, and of course here closer to home we have the U.S. government shutdown kind of overhanging all of us, and I think that's sort of the big theme, right? Is there's this sort of asset that doesn't have any sort of sovereign overhang. It can operate sort of independently. It's uncensorable, and it serves as a way to sort of protect your assets against inflation. So that's been like a big theme that we're seeing, and the rotation is really just starting now with the Bitcoin on that side. And then on the sort of like top 10 alts, right? Like the theme was around upcoming ETF listings. You already have the tailwind from the DATs, the digital asset treasury trade, a lot of inflows coming in from there, and we're seeing a lot of the sort of second order effects, right? So once all these assets are sitting in the ETFs, sitting in these digital asset treasuries, what benefits? It's really, things like lending protocols, things like staking, staking tokens, LSTs. All of these things are going to be ways to deploy capital for these treasury managers directly on chain. You've already had a couple of the more forward-thinking managers, pretty explicitly say they're going to take those Solana or those ETH and deploy them in some yield-generating way. So we're seeing a lot of that. It starts obviously in the more kind of benign ways, like trading options with a regulated counterparty or on exchange, or CME options, things like that. But then it can become much more complicated, or in some ways much simpler, right? Like if you're just staking an asset and you're generating in a protocol native way, generating yield in a protocol native way, that's something that is justifiable and pretty easy to explain as a CIO. Those are some of the high level things. I mean, there's a lot of things going on under the hood, right? There's the rotation trade happening into stablecoin governance tokens like Athena and some of the other ones. We heard repeatedly there are a lot of funds that are just had historically operated as market neutral vehicles or quant strategies that were thinking about launching more complex actively managed strategies under the guise of like a stable coin wrapper or some kind of like stable value on-chain, token. There's also a lot of focus on perp dexes. We kind of saw that with the explosion of Aster as a competitor to Hyperliquid. But there's maybe 3 or 4 other tokens that have seen, a healthy appreciation, like 3 or 4x from pre-Asia conference levels. And a lot of this is just, it's really hot money that's kind of rotating across these assets. It's really money that would have been in meme coins, like not that long ago, right? Like kind of things that we're launching on Pump.Fun. But there is this sort of renewed interest on like the revenue meta of investing in crypto, which as most TradFi people just call investing. There's a lot of that happening right now, and a lot of rotation going to tokens that could potentially generate revenue from actual utility. So that's kind of exciting. Those are kind of the main themes.
Yeah. All right, let's pour one out for the meme coins. Um, real quick, I want to go to Ron, but before Josh, like your team came out with a report uh, that was talking, I guess it was today or yesterday, about how the options market is now driving spot price when it comes to Bitcoin. I was hoping you could just briefly touch on that.
Sure. I mean, it's pretty clear that, there's endless appetite for options in Bitcoin, particularly. Like you can kind of see it in the growth of IBIT options OI, which surprisingly is in a year and a half has exceeded the open interest on Deribit. So there's just a lot of demand out there for people to use these instruments to hedge and also to generate yield. We're starting to see, pretty significant movements going into major expirations. So like that end of month expiration in September is a meaningful one to take note of, right? There were, several $billion of options that rolled off at that point. And it's really every quarter you see a lot of those options roll off. And that is generally going to have some vol increasing impact because a lot of the options that had been sold into those expiries as they roll off, there's a lot less gamma supply within dealer hands. So meaning like dealers that own a lot of options no longer own them. And so it really loosens up the market a little bit for the spot price to move higher or lower dramatically, like post expiry. So that's kind of like one theme that we're seeing is I would say if you asked me a couple of years ago, I would have said not a chance. The spot market and the perp market is a lot deeper than the options market, but we're at a point now where that's having some meaningful impact on spot prices.
Got it.
I would also hop in here to say, as we think about that sort of dynamic, if you want to see clues as to where that activity is coming from, we see the same thing in a lot of stocks that U.S. retail like to trade in the United States, because especially when you're looking at relatively short-dated option expiries that constantly roll on dealers, exactly as Josh was talking about, you see that phenomenon driven by U.S. retail specifically. I mean, we saw the same thing in like the whole GameStop and then after phenomenon with retail stock trading. And it should just tell people something about, call it, Bitcoin entering into a new regime compared to a lot of the other tokens that we're dealing with. Like I would tell you at this point, Bitcoin is mainstream now, right? You're starting to see retail trading. You're starting to see institutional trading. You've got all of the crypto natives trading it. Like this is disseminating into the world in a way that maybe we're not seeing yet. Josh, I'd be curious as to your opinion with a lot of the other tokens.
Yeah. I mean, not yet, right? Like there is a robust, altcoin options market, but that all exists in crypto world, not in TradFi world. I think that maybe the closest thing that trades with that much interest is like MicroStrategy, because there's that MicroStrategy yield ETF that sells a bunch of options on MicroStrategy stock. But yeah, like other altcoins, not really as much.
All right, cool. So Ram, let's come to you. Josh mentioned the debasement trade. That is a very nice segue to a debate that you had with Vinny last week that was very well received on sort of the competing merits between gold and the S&P 500, and sort of like unstated within that whole debate is where Bitcoin fits in. Gold's still going up, Bitcoin's still going up, stocks are still doing well.
Yeah.
About 4 or 5 days since that debate, Bitcoin hit all-time highs. What are your kind of takeaways from that conversation, and what are you seeing right now?
Yeah, well, I think Vinny's up 2 days in a row on that gold versus S&P, so I don't mind holding myself accountable to this. I got 8 months and 28 days to go.
Yeah, you still have a while. For anyone who did not listen yet, Ram bet Vinny $10,000 that the S&P would beat gold over the 9 months from Thursday to July 4th.
Late momentum moves, you often kind of see that, as Josh and Austin know too. Late momentum moves, they keep going up and up and up and up, and then that's it. So timing this is always hard. But this is a chart of on the topic of debasement is USD JPY. So the funny thing about this is a trade. This is US dollar Japanese yen. I could tell you a similar story for DXY, which is like a trade weighted approach, look at the dollar. But the headline around this is that actually the dollar is increasing in value. So the debasement trade is a trade that's alive and well, but it's actually not about dollar debasement. It's a narrative that got momentum and legs underneath it. and it's continuing. That's it, which is fine. That doesn't make the rally less legitimate, actually. You start with an idea and a concept, gets rooted in people's minds, and then assets start to attract momentum, and it keeps continuing. I see the same phenomenon on small caps. It started as rates compressing and companies can refi. Now those assets have momentum, and they're going to keep rallying, even though the 10 years come down to 4%. It's kind of leveled out here. So I don't think this is really a debasement trade. People like to call it that. What it is, it's an asset revaluation. This is animal spirits. This is excitement. We're entering the fourth quarter now. And things could get really nutty here in a bullish way. It's really people are marking up each other's bags is what asset revaluation is. That's what that means, right? Someone moved into the neighborhood and they decided to spend 30% more on the house in the neighborhood. So all the houses are worth more, and everyone's agreeing each other's houses are worth that much. So everyone's wealthier as a result. That's what markets do. That's how markets create wealth.
Do you see it as just animal spirits, or is there anything more substantive behind it? And
there's a couple other drivers, of course. Yeah. I mean, this is what's the meme for this? Like, the right meme is the person in the face who's in anguish and smiling, whatever, one of those things. Like, this is a pain trade rally. It is a hated non-consensus rally where a lot of people look. I saw a study. We see a study come up once a month where people interview on what's your view of the economy? And if you're Democrat, you think the world is ending. If you're Republican, you're like, oh, wow, this has never been better. It's only getting better. We're addressing issues. And the people on the Republican side are optimistic about the future. People on the Democrat side are not. Historically, we haven't seen this. If you go back like 10 years before, we haven't really seen that. Maybe we have during the George Bush era. I don't know. But historically, to my knowledge, we haven't quite seen that. Austin will correct me on the history if I'm wrong around that. But overall, this is a people caught off sides story, right? They studied in school, tariffs were bad. The cause of the Great Depression was tariffs, and now they're off sides. And, you see it like objectively and measurably in long short positioning, for example, which is the data set I look at like every week. And the percentile exposure is 50% of their historical 3-year exposure, meaning they're underinvested while markets are hitting all-time highs. So they have to buy every dip. If they don't buy a dip, they look silly to their LPs. Why don't you buy the dip? Like, if they could go back in time and get long stocks, they would. So it is when you look at a chart, what you're seeing is emotion and anguish driving this higher. The other thing I would say to this, it's a really interesting I have so many cross-cutting dynamics that are at work in this market. Here's another one. So the consensus earnings expectations, the S&P, have been steadily coming down over the last month and a half, just as credit spreads have widened and there's been fear around non-farm payrolls and are we in another recession, which is not going to happen, okay? But probably you're going to see earnings beat that 6%. Last quarter, earnings came in year over year like 12%. So suddenly we think that we're going to advance one quarter and year over year we're going to drop to 6%. No, that's not going to happen. We're going to hit 10% or 12% again. So all that's super constructive. All that's very constructive. So it is an interesting time though, like, because you're seeing these, like, you saw the AMD deal this morning, right? OpenAI got like 10% of the AMD. I want to dig into that transaction more closely. Essentially, AMD gets an anchor customer for their inference chips in OpenAI, and OpenAI gets 10% of AMD. AMD stock went up, and OpenAI has got these warrants, like, so their stock theoretically has gone up too. Usually, there's a loser in one of these trades, but both went up. It's that kind of market. It's a funny market, right? So, yeah, look, I think you might have a scenario like where at Q4, like I could see S&P above 7,000 by year end. I could totally see that. I do think dips will be bought. There's a lot of local over positioning, and Monday rallies are kind of like shitty rallies, to be honest. So don't overread into them. I think it's good to have Josh as you, because Josh is from FalconX. I don't know if you had a chance to introduce FalconX, but like, you're at the flows and you're helping to cross markets and you're seeing what institutions are doing. I think so. You provide a lot of good market color there, and I always like talking to people like Josh regularly because it's a different data input than you might not ordinarily get just looking at like research and other elements there.
Yeah, Ram, don't give away all my reporting secrets.
You got it. Mum is the word.
Yeah. No, we went into it a little bit at the top of the call, but I honestly feel like the amount of excitement and almost euphoria in crypto is it's near a high for the year, and I mean mirroring the price action. But I think it's partially because there are ways to outperform now, just given the amount of sectoral rotation happening within crypto assets themselves. So it's like these fund managers historically could outperform by just being ahead of the trends and sort of like hearing things, quote unquote, from other people and moving capital faster. And those opportunities exist again, right? Like we already talked about the stablecoin trade and the perp dexes, but even in the last couple of days, you saw this new emerging narrative around privacy tokens, which has really gone unnoticed by a lot of people, right? Unless you're kind of deep in the weeds and you're kind of watching, top 1,000 altcoins and seeing what's outperforming. Like things like Zcash is trading at like $160, and 2 weeks ago it was like a $40 token. So these things that have been forgotten for 5 years or more are coming back. That's really exciting.
Right.
Yeah, there's a lot of dispersion. Yeah, a lot of dispersion.
Do you see, like, back to euphoria? I mean, that's one of the things I always look for as a sign of like market tap. I don't think we actually have that. If I look around just markets broadly, I don't see that. I think people have there's still fear, there's still people off sides, but you made the qualifier in crypto markets.
Yeah.
So, I think a lot of funds have lagged Bitcoin in crypto. So what are they going to do now? Are they like forced in a performance pace now? Or like what's their, what are the top 3 moves? Is like revenue back to the DAT trade seems like it's mostly in the rearview mirror now, although some of them are really starting to work in recent months. But people have realized that like you don't need 97 DATs. You just need a handful of that liquidity and a good meme person to lead it. But are we actually at euphoria, or is it an octave below euphoria?
Yeah, octave below is probably the right way to put it. It's almost like I could see a path towards later this year or even in Q1 of next year, like a real blow off top type of move in crypto. And we're not quite there yet. We just broke all-time highs, right? So and the money, like you said, is not really in crypto, and it hasn't been for the last year or 2 years. It's been in equities. It's like all the speculative capital is trading, meme stocks and AI and the quantum computing narrative and all this other stuff. And now it's like you could see all of that come flooding back into crypto, and that will meaningfully move asset prices for our little corner of the world.
Josh, what do you think is behind the privacy? I was actually just looking at Zcash and Monero and NIMS.
Yeah.
I think Ram, maybe Austin, like, I've had my heart broken too many times over privacy coins because it's one of those things that I wish people valued more. And I actually wrote a story on Zcash back when I was at Forbes, and I know they didn't like it because we called them a zombie token, even though I said I was rooting for the project. And why is it's up 225% in the last 2 weeks, but the other tokens haven't moved all that much? I'm curious if there's something I'm missing, because I would love.
There's a couple of things. There's like, one is people now are realizing that the sky's the limit again when it comes to crypto valuations, right? For the longest time, you're like, well, is this thing really worth like $10 billion? And with hype trading where it is, and then like all these perp dexes starting to move again, and people are realizing that like you can actually start putting like huge amounts of multiples on things that are revenue generating, and then if it's not revenue generating, you can even put higher like L1 type valuations around things. So Yeah, it's all coming back. I mean, like these are things that have been forgotten, like you said, for many years, and they're all trading at 200, 500 million FDV, while there are new tokens that are gaining traction today that are like 10, 20 billion FDV, right? Think about something like Plasma, right? Plasma just went live like a month ago, and it's already achieved like a $10 billion FDV, right? So it's one of these things where it's like we're all remembering again the animal spirits that happened, last cycle, and now everything's getting re-rated higher. I think that's a big part of it.
Okay, cool. All right, Austin, what are your thoughts on what Josh just shared?
Yeah, so as I was sort of noodling over Josh and what Ram was saying, I think there's a couple of things that are colliding narratives that are producing the current price action. So one, especially when you look at Bitcoin, don't just look at the United States, right? Like it's important to remember the bid for Bitcoin is global, and a lot of it historically has come out of Asia. So we just had kind of a surprising election result in Japan, and I will summarize the economic views of the new prime minister there as let's run it hot. And if you're looking at that and you're looking at Bitcoin starting to go parabolic as you're having these sorts of moves, I do think there's a certain element infecting like all of this, which is the debasement trade that we've been talking about, right? It's important to remember if we really believe it's the value of fiat money falling, then in price terms, everything should be rising. Witness, for instance, gold also like really cranking up into highs that you see Bitcoin following. Right. Two is, as Josh said, crypto this time around has not been the leader. Gold went first. Crypto is like backfilling into where gold and equities have already gone. And if you believe that, that means if you're an alt season person, we're going to see at least some of these either old coins or some of the new ones like, say, Plasma or Aster start popping off occasionally as well. Like that sort of price action is not totally shocking to me. And it's one of the things that I think people misunderstand when they make comparisons about these regimes. Like Ram earlier brought up like tariffs as the cause of the Great Depression, and I would remind people we were in a deflationary environment already after a credit shock at the time the tariffs were hitting in the Great Depression, and you could think of them as trying to defend the gold standard and preserve the value of money. Here they're just throwing the value of money overboard. They're basically like, no, we're gonna just keep doing this, nothing stops this trade. And so in that world, the correct answer is, and I think we're seeing this in the options market as well, get long hard assets and risk assets, probably using moderate amounts of leverage if you could borrow in like dollar denominated terms and go buy things like Bitcoin. And as a result of that, as I look at the market action, I'm not seeing a lot of things in, call it Bitcoin or gold, that yet speak to euphoria, right? Like we're not seeing like, cab drivers being like, I'm retiring, I'm buying a condo, it's all over, like we're done, levels of euphoria yet. We're definitely in a bull market.
You should have been listening to Vinny on Thursday, Austin.
Yeah.
That's where he was.
Yeah, no, but we're in a bull market. All bull markets like climb to some degree both a wall of worry and certain levels of optimism. The point at which you're at euphoria is when all of the bears have capitulated, and we're not there yet.
Yes, I agree. Just sharing a screen here again. This is the Invesco commodity index, and what you can see here is that it's really gone nowhere. In a year, it's actually lower than levels we saw from 2022. So if you look at the holdings, this includes various commodities such as gold, silver, copper, corn, crude, soybeans. So what's the point? The point here is that I contend this is actually not a dollar debasement rally. That's the narrative. Again, it doesn't disqualify the nature of the rally. Gold is rallying, but like oil is at $60 a barrel. If there's dollar debasement, then the core energy source that runs the real economy should be repricing higher. In real terms, it's not. Oil's at $60 a barrel, right? This is momentum and traders and trends and trend following. That's what this is.
What do you see as like the limits? Like what are the key thresholds to look for next?
I think what Austin said is exactly right. When there's no bears anymore, when does Jim Chados cover his Bitcoin short? or MSTR short, right? I mean, how is MS? We gotta check it out. Has someone sent like someone's got to do like a safety check, or kind of a neighbor's got to visit, knock on the
wellness check. I think that's what you're looking for.
like, Jim, are you okay? Check. Send him a gift basket to his office. We can put in some calls in MSTR to hedge him out a little bit. I would check on Jim Chanos. If Jim Chanos has to cover MSTR, that would be actually when the short starts to work.
But short of that, are we in like new price discovery mode? Or are we just still in like a general like?
I think it would be good to get Josh your perspective. I think you are. You're at all-time highs.
Yeah,
you're all-time highs. So yes, that's what it's supposed to happen now, and that's every single day you are now in price discovery.
Yeah, I mean, I agree. I think by definition, right? We're through all-time highs. Like people are trying to figure out where supply comes back in, and we've actually worked through a lot of supply issues, right, in the last couple of months. There was very famously like the $8 billion of like stale coins from a long time ago that were sold into the market, and a lot more like that, right? Just like old coins moving and getting liquidated. And the market's absorbed all of that pretty well. Like we stayed well above, really like the 110 level in Bitcoin throughout the summer. And I think we're at a point now where there is this latent demand for just something that's not dollars, basically. I mean, yeah, maybe it's not a dollar debasement trade, but there's something happening. Yeah. There's like a desire to get into real assets, like hard assets, and things that are not necessarily tied to some of the political uncertainties.
I agree. I can go around
like fiat.
Yeah, go ahead. Yeah. 100%.
This is what I wanted to push back on a little bit of the like momentum versus debasement thing too, Ram, is that I want to go back to what I said about this isn't only a US dollar trade. You are seeing things like food inflation in Japan. Right. So as we think about re-rating, especially with regard to Bitcoin, I would really urge people don't just look at dollar inflation for that one. Like it is possible we're going to have different things going on in the US economy than elsewhere. And that could drive, like more than stocks, that could drive Bitcoin. It is much harder for people in Asia to buy US stocks in size at like the retail level.
Fiat debasement, maybe, if that's the right way to put it.
Oh yeah, fiat debasement. You should still see commodities rally if that's the case, though, versus dollar, right? So,
yeah.
And certain commodities are, like gold.
Yeah. Well, what do you guys make of like this doomsday narrative that I'm seeing on Twitter a little bit, which is why people are going into Bitcoin and gold? I think there was a report from Arca that was talking about it. Is that just like cheap marketing speak and taking advantage of an opportunity, or do you think there's something there? I mean, it kind of speaks to Ron what you were talking about a little before, that people were kind of like clenching their jaws. They hate this rally, but they have to chase it.
I think everyone that needs to chase is latent buying power. That's what it is. So I think dips will be bought. There's a lot of changes happening in the markets now. Like you pointed out, Josh, like the IBET options are larger than Deribit now, which is a massive statement. So BlackRock has about $100 billion in IBET now. So $100 billion of the Bitcoins in IBIT, they make 10 bips off of that. So you wonder, like, is Citadel making more money off of IBIT's options market than BlackRock? Maybe. It could be, right? So the ecosystem just starting to shift now. You're starting to center around BlackRock and their options market. Coinbase put in a bid to acquire Deribit. I don't know if that transaction closed.
It's closed, yeah.
It's closed?
It's official. Deribit changed their official color scheme to blue.
Interesting. Have they opened up that market to retail investors, or are they still going through CFTC?
It's
international.
Yeah,
it's still right.
International market. Yeah, not US yet.
And what do you make of CME launching or planning to launch 24/7 crypto futures and options? How does that fit in here?
Yeah, I mean, it's not that much of a stretch, right? I mean, they're just adding weekends basically. It's big for traditional markets for sure, and I think that was like the biggest like crypto native angle that most firms had, was like, hey, we're opening our markets even on weekends for traders. And I mean, I also think that trading, like TradFi firms are going to hate trading weekends. Like, they're going to have to hire more people to hire, to cover Saturday, Sunday, things like that. But yeah, I mean, that's just the first step. Like, I think the bigger thing will be when, equities are going to be trading 24/7. And that's actually going to be a hard problem to solve for most people. I guess once there's like more venues that are trading around the clock, there'll be a natural like base of liquidity. But right now it's like, where should some random like mid cap name in equities be trading on a Saturday that, especially if it's like linked to things that might be happening in geopolitical realm, it's anyone's guess, right? It's very tough.
I would also say I think this aligns with a trend we're going to see across markets that, while related to blockchain, it's not specific to blockchain, which is things moving to 24/7 in general. Like, there are a lot of places now that, for instance, have 24/7 real time, like money movement. So one of the preconditions that you end up with for actual effective trading 24/7 is you need to be able to, pay for something. Right. And so you get into this sort of iterative upgrade cycle, whereas underlying money movement moves, then you tend to see trading instruments move because, like, oh, great, I can agree to a trade, but can't settle anything for T+2. Kind of makes weekend trading like academically nice, but not nearly as powerful as it could be, when also I can settle the trade at like 3 a.m. on a Saturday. Right. And so one of the things that blockchain technology is going to do to traditional markets. So if you're looking at investing theses, like people at the intersection of this, like the Coinbases and the Robinhoods and Citadel, are all very interesting sort of objects to monitor, are the ones that can benefit from sort of this upgrade cycle across financial markets. Because I would tell you, my central opinion is 30 years forward, everything is trading 24/7.
Yeah. And that's the vision of NASDAQ. That's the direction of travel.
The right meme here is the North Korean farmer meme. It's all so tiresome. If we're all going to be around the clock trading every asset in the world, no more breaks for traders, I suppose.
It's no good for cortisol levels and sleep, and and not good for overall health.
AI is going to be trading it all. Why are you guys worried?
AI will trade it all, which is another way of saying Citadel again, right? So,
by the way, that story I wrote last week about zero gravity, that I know has not made many friends in the crypto ecosystem. One of their value adds in that investor deck that we obtained is that they're going to use an AI agent to rebalance and manage the investing of the zero G tokens that they're putting into the machine or into the company. So
what could possibly go wrong as somebody who's maybe helped at a place that had algorithmic trading strategies before? This will be.
Well, there are a lot of venture funds that are raising money now. Venture funds know when to raise money. You raise money when everyone's in the money. And there's quite a few that have recently announced closes of new raises. That's good for the ecosystem, like longer term, right? There's more recycling of capital. It goes back into the ecosystem. Never been a better year for them to do that. And they really couldn't have in the last few years. They didn't have much to show for it. Now they have, points to show for it. But I do think, like, the proliferation of DATs and all the rest, I thought, Josh, your point around, I think we are like an octave below off top, but sometime in early next year, or maybe Q1 next year, or maybe towards year end, I think it's worthwhile to prepare for something like that. There's just so much issuance out there. Like, who's not in that? Well, I guess there are people that aren't. There's really two segments of capital. Like the left behind crowd, that clenching teeth, that are buying every dip and waiting for the cracks that doesn't show up, right? Then there are the folks that are in and have more confidence now because they're up a lot from the April lows, and they just keep pressing it higher, right? So that momentum just keeps pressing higher, and this crowd has to buy the dip, and maybe they'll short, but then they get squeezed out and it goes higher. You look at like quantum stocks, for example. I've talked to a number of money managers in the last week around these quantum stocks. Virtually everyone I know is just waiting to short the hell out of these things. They're just waiting, but they aren't really doing it yet. Even myself, like I'm in, I'm like, oh, it's not working. Okay, get out. Just wait. You put a foot in it, it's not working. I'm out, right? But there is going to be some moment in the future where everyone has this recognition moment. We're like, oh yeah, it's done, right? When does that happen? What does that moment look like? I would keep an eye out for that. That moment will happen on social media, though. That much I'm 100% sure of. But there's a meme this weekend about how they took like the headquarters of all these quantum stocks. Did you guys see this? It's like they looked at the HQs of these quantum stocks, like one's like above a dry cleaner in Midtown somewhere. Like it's like these random buildings in the middle of nowhere. Like no, clearly they're not into any quantum qubit technology. Next to like the corner bodega, right? So, I thought, gee, like maybe that's the moment, but no, that's apparently not the moment. So it's a super interesting time right now. Definitely 2021 vibes, but I think between now and year end, you should be bullish overall.
I will remind people that the thing that cracked the original tech bubble was when the CEO of Cisco finally guided down. So again, as you're looking for when are we in a blow off top, what are symptoms that were there? It's all the bears have given up. The fact that Rom is still trying to short quantum stocks tells you that we have a way to go, right? Like that as indicative and has value because he's somebody who's thinking about these things and has not yet given up on how stupid the retail people are going to be pushing this to the moon, and they have a lot more potential power to do that. But number two is insiders start to defect from the consensus, right? Like, let me tell you what would crush the entire market right now is Saylor comes out and goes, I'm going to hold off buying for a while. I don't like how Bitcoin looks. I'm not saying he will do that, but my point is it's when insiders who have been part of the cycle guide down is another.
I agree. When insiders say enough is enough and this is stupid and we were the fanboys all along and we think this is silly. So there are 2 points, right? Like what broke the .com cycle. One was missed earnings estimates and shifts in guidance, to your point. That was one. The second one, like what started Black Friday, there was an article in Barron's and it just laid out how all these expectations were just silly and absurd. And we didn't have social media then, but it went the equivalent of going viral, like most widely read article on the internet, And that was like that recognition moment. And then people said, okay, this thing is,
I feel like in this case, though, we need to sort of like bifurcate crypto with like tech and general TradFi, because
back to the bifurcation we were making earlier, I think these things are blending together a little more. And the correct bifurcation here is certainly Bitcoin is behaving differently than a lot of the other tech stocks, right? Like I could totally see a world in which we hit this blow off top, and yet because of the backdrop fiscally, Bitcoin and gold continue to do fine, but it's a lot of the altcoins that get wrecked. So I'm just saying I would be careful about saying crypto is one thing at this point, at least without taking
fair enough. And that's a good clarification. Yeah. I was actually going to talk specifically about Bitcoin. I mean, we've all been in crypto for a long time, and I'm sure we all remember Black Thursday in 2020. I was a Kraken at that point in time, and I think Bitcoin dropped below 4,000 or something, and we were all furiously just trying to buy it because we're like, you know what, like if it goes to zero, we're out of jobs anyway, and like let's just go down with the ship. And I was angry at Coinbase because I hadn't bought in a little while and they didn't accept my credit card, so I wasn't able to buy anything. But there's just this religious fervor about Bitcoin that I can't. I mean, we're all joking when you talked about Saylor capitulating, because there's just no way that would ever happen. There's just no one. Like I know plenty of like Bitcoin billionaires that have already said like I'll buy any Bitcoin at a certain price. Like if people want to sell out, like it just has that type of religious fervor. But on the stocks, I mean, sure, it's. And like when that unravels, like that thread gets pulled out, or the pin gets pulled out of the grenade, when all this stuff comes down, because nobody I mean, Nvidia would be damned. No one expects them to be able to cash the checks that are being written right now in terms of earnings. I don't know, but like there's that saying that like being early is the same thing as being wrong, and how do you time that?
And you still have good catalysts ahead. The Clarity Act is still coming, right? Well, you still have future IPOs that can happen. Like I think we've had one hell of a run on IPOs, and you're starting to see weak performance from IPOs, which is another kind of warning sign. Like Figma had a big pop. Now it's down a lot from the pop. So when retail investors get burned on those bets that they're caught into, then they become twice shy. So those are things to look for. But again, it's also Q4. So they also know, like, everyone's a trader now, right? So it's like, it's going to go, it's like self-fulfilling prophecy time, I think.
Is Gemini still below its IPO price?
Oh, let's take a look.
Because I feel like, I mean, if they are, they're like the one outlier and they're a crypto firm. I mean,
It's a ticker.
I think it's GNNI.
GEMI.
It says Gemini Space Station.
Yeah.
Okay. I thought I saw. I was like, is that? If you put
it's up, I think it's still up.
I know it dipped, but I don't know. I haven't.
It depends how you measure it. Like, there's the IPO price, then the close of the opening day. Man, I don't know what it opened up at.
So what we're saying is it's gone sideways.
Yeah.
Right. So you got this. You've got Circle, which hasn't hit their unlock yet. This could add future pressure. You know, the unlock is like 6 months. Obviously, it was a great IPO, but then you can see it still hasn't approached the unlock yet. You know, CoreWeave went through this process already. It's on the other side of that. I'll show you a quick example. This is CoreWeave. The unlock date was this day here, September 3rd. See that big red line there? That was also the bottom. Right now it's up like 30% or whatever the price changed since then. So that's going to happen for some of these recent IPOs in, call it like 4 to 5 months time, because it's some of these issued a few months ago. So that puts you into like Q1 next year.
So are those good short opportunities for companies, people that don't want to get caught off guard?
I wouldn't do it now. That's in the later bucket. And if you do that, you should position size very small.
Okay.
Or you've got to be offsetting with other stuff. Like Circle is an interesting case there because it's not clear how much of their revenue they retain long term. Like, there's a lot of competitive trends, like working both for and against them simultaneously. I would certainly say it's not an obvious short. But kind of in the same way, like, so to go back to our Bitcoin comments, like, actually there's a really obvious time to short Bitcoin if it ever happens. And that's when the US government gets serious about the deficit and balancing the budget. That's when Bitcoin's going to get fucking shelved, because the debasement trade is over. But until that happens, that's not a thing. And so it's important to understand, like, what is the fundamental story here? For me, what would spook me about Circle is either rates going precipitously down, because that's driving the majority of their profitability right now, or thanks to Genius, we actually see people coming in with distribution at scale who just start absolutely clubbing them, right? Like, if Amazon partners with somebody that does a stable coin, I'm terrified for certain.
Well, that's going to happen, right? They're going to internalize their own stable coin. Walmart's going to attempt to internalize as much as they can, right? The big banks. Like, I think Circle is in a tough position for all those reasons. Like, competition's coming. It's almost an axiom after Newton's third law. Like, stablecoin competition is coming.
I'm really interested to see what Stripe does if they decide to launch their own stablecoin to sort of be native to their what's it called, Tempo, their blockchain. I know they created a white label service to let their clients do it, but there's just so much money in running stablecoins. I mean, I'm guessing they're going to take a cut of whatever white label stablecoins they help create, but it seems like a very easy way for them to leverage their scale before they let someone else do it for them.
They have an ability to do some things there that people like Amazon don't, though, right? Like, I'll remind everybody in the Genius Act, if you're a publicly traded non-financial company, you're prohibited from having a stable coin without some pretty exceptional approvals that I have doubts will be granted to anybody. And what that means is, so Amazon will be white labeling somebody's stable coin and or just using somebody else's. And by the way, that's not to say they're not going to strike a deal like Coinbase has with Circle to take a huge amount of the economics. I think they totally will, because the lesson of stable coins so far has been distribution is king. But what it also means is these things are going to be more either interoperable or fungible than people expect. We're really building another base layer for money, back to my earlier comments on 24/7 money movement. And so as you're looking at where the value accrues, and part of why I look at Circle and I'm like, I have questions, is I'm not sure that goes to, call it, the public utility layer. it might end up going to.
I 100% agree. So Amazon will pick a coin other than Circle because Amazon wants to be a super app. Coinbase wants to be a super app. So they're competitors.
Yeah.
So you're right. And you're right. Austin's right. Amazon will king make some other stablecoin issuer. Who is it? Is it Paxos? I don't know. Those are interesting things to think about. Like maybe it's Paxos. I don't know. Like, or de novo entity that is focused on meeting the needs of Amazon and their peer groups.
Maybe Amazon will just auction off the ticker AMZN or USD AMZN, and then just see what happens there. All right. So one other thing I wanted to ask about, maybe Austin, this is again, I want to start with you. Coinbase applying for a banking license. What's the play you see there?
So I will note specifically Coinbase is applying for a trust bank license. Like, it's important. Banks are not monolithic. There are a lot of different subspecies within the family, so to speak. That to me feels like Coinbase is looking at custodial applications. They're looking at clearing applications. And if you're a company that's expecting everything will be tokenized, if you're like, yeah, and I want to be the guy holding all that stuff or like doing all of the transit work, this is exactly the kind of license you would get. They're not going to become an IDI, aka Insured Depository Institution, where they're going to be going and getting FDIC insurance and like taking retail deposits through that thing. So like, let's be very specific about what they're doing there. But it tells me, back to your super app point, that Coinbase is thinking of themselves as, how do I start getting myself into the conversation of taking our sort of 1970s era paperwork crisis Band-Aid solutions and massively upgrading them. And I want to be standing at the nexus of that.
Do you guys have any thoughts, Josh or Rama?
Yeah, I think I agree. Look, it's a payments play. Brian Armstrong, CEO of Coinbase, has always been focused on payments, and I think the OCC license helps them in payments. There's 200 other fintechs that want an OCC charter too. It's a highly coveted thing, and the administration will be granting dozens of these OCC licenses. A few years ago, it was just Anchorage. I think one other bank that got the OCC. Just think about how hard it was to get an OCC chartered. OCC charter. Now you're going to have dozens and dozens and dozens, and I think they're trying to issue as many as they can before the midterms. So if you want to get something done with the bank and a bank license, now's the time.
Yeah. One other thing that caught my eye too, Galaxy kind of launching a retail focused like trading and savings app. That wasn't something, I guess maybe I was mistaken, but that wasn't something I necessarily saw on my bingo card. They have
what's going on there?
I don't know.
Or you're retail, or you're both.
Or you're an AI data center company.
Yeah.
The Galaxy story it's first of all, it's been a great asset. It's done incredibly well. Like, hats off to Mike Novogratz and the team. We have many favorite people there, like Alex Storm, who's been on the show. We'll have back on again. But there's so many things going on here, right? Like, you could tell it's run by a trader. These are traders operate, right? Traders like, hot thing go, AI data center, Bitcoin miner thing. Let's get that one too. Retail trading app. I'll have some of that. When can I issue stable coin? It's a trader on organization.
Yeah. It's
So what we're saying is Galaxy is the super app.
I guess they're trying to. It's curious. I mean, they hired Zach Prince a little while ago. I mean, that,
Founder of BlockFi.
yeah, like this was kind of like what he did at BlockFi, and I mean, notwithstanding everything that happened with BlockFi, he built a really good consumer brand that had a lot of loyalty, and so I wonder how much of a role he had in putting this out. But it costs a lot of money to build. I mean, not to build a retail brand, but to actually market it and get that client base. I'm curious. I'd love to know what the economics were of that, and how that
they have shareholders, and those shareholders can be customers, and this is what we've seen with Robinhood. Customers are shareholders, shareholders are customer. It's read write own.
Well, I think it's a little different, right? This is maybe more akin to like Goldman Sachs trying to launch like a retail operation, with acquiring like retail deposits and the credit card stuff, which like I don't know. I think if you ask like people internally at Goldman, I think it's like pretty mixed reviews.
Fundamentally well.
Failure.
That's why they're trying to get out of Apple.
Goldman's Marcus foray into retail is a complete failure and disaster. If they could go back in time and not do it, they would. They
Right.
sold the credit card business that they do with Apple to Citibank. It was off customer. It made no sense at all. And by the way,
But that's the analog, right? Like if you talk to Novo, that's what he thinks of Galaxy
Right.
as the Goldman of crypto.
Well, I would pause people here and remind everybody part of why Marcus was such a fiasco is something Galaxy doesn't have to deal with, which is the entity segregation rules that you're dealing with for customer deposit taking when you're a bank. Like, that is one that I think is very, very niche, because unless you're a very specific kind of commercial bank that also has a large trading arm, it's hard to wrap your arms around how brain damaging it is to try to do that thing. But like, people who had done that kind of looked at Marcus from day one and are like, what are they going to do with, like, does Goldman intend to build a consumer lending franchise? Because otherwise,
I'll tell you what, though, Austin, I was at Citibank when they announced it. I was in Citi's like retail bank, and people were scared because I mean, notwithstanding everything you said, because they know how banking works and how things have to be segregated, but just Goldman's brand as being like the smart person investment bank where like they could pick whoever they wanted for business schools and stuff. And now they're getting into retail, and that's where the money's going to be made. And this was like, what, 2018, 2019, whatever it was, they launched it. People were nervous about that. Did not expect it to be a huge fiasco like it was.
I will contra that and say somebody who's quite senior at JP Morgan, who's a friend, texted me the day the Marcus announcement came out, and the exact quote is, they're going to regret it.
Yeah, I mean, it was a complete failure of execution. I mean, I remember those original slides. They were forecasting a return of assets of 3.5% from that business. Never came close to that. Complete failure. It was ego over kind of humility. But back on Galaxy, so I hear your point, Josh. You're saying, look, doesn't Novo hold Galaxy out as Goldman for crypto? Look, Galaxy's a meme stock. Why couldn't its shareholders adopt the app? That's all I'm saying.
Okay. All right. So good discussion. Let's start to wrap up. Josh, one of the things I like to do when I get to host is ask all of my panelists to kind of either share something that was left on the cutting room floor, or just a contrarian opinion, something that they'd like to highlight. Curious what you think, or again, as Ron was saying before, you really have visibility by being at FalconX into like what the smart people are doing right now in this market. Would love it perhaps if you could share like one or two things that maybe you're seeing, or especially if they're non-obvious tokens or strategies.
Sure. Yeah. I mean, I think I got a lot of questions while in Asia. You know, how does this cycle end? And I think it's going to be pretty different than last cycle, right? So if you think about last cycle, and you know, coming back to BlockFi and the question, and you know, of retail deposits basically funding, you know, larger trading operations. That was the main kind of downfall for the last cycle, is that the leverage that was afforded by retail deposits in sort of like undersecured lending, you know, that became like pretty endemic to crypto. And I think this cycle is going to be pretty different. And also, if you think about last cycle, like DeFi was sort of untouched in a way. Like DeFi was pristine and you know, performed the way it was intended to. You know, things like Aave worked just fine, you know, throughout the process of unwinding the leverage. I think this cycle is going to be different, and I think it's going to surprise a lot of people. But things like DATs, you know, are not inherently that levered. There's some of the treasuries that have converts on them, and people raise that as a point to say like, this is kind of concerning and it's going to be the cause of the next cycle unwind. I kind of don't believe it. I think there are some of these equities that do carry debt, but they're being underwritten by banks, and there are sophisticated investors that are buying those converts. So there is some underwriting standard being applied there, and the vast majority of DATs will never be able to issue debt because nobody will underwrite it. So I think that's actually not the cause of the next unwind. I think it'll be actually in DeFi. So what's happening now is a lot of strategies that are sort of like actively managed strategies that are a little bit less transparent are getting put into tokenized formats. So either through like fund tokenization platforms, or explicitly as vaults, or even in some cases being issued as some kind of like a stablecoin wrapper. And these things are then being put through looping strategies, right? So like people are going into something that's maybe like a 10 or 12% yield, but they're borrowing borrowing USDC at, let's say, like 7% to loop that strategy up to something like 25% yield. So when it turns out people become aware that these are not basically like risk-free strategies, I think basically, there's going to be a ton of leverage built up into some of these trades. And that will actually be how, the deleveraging happens this cycle. So it'll happen actually in DeFi, is it'll be like the same sort of issue, which is like underwriting standards being, debased in a way. And I think it'll be because people will be using bad forms of collateral in the forms of some of these actively managed, like tokenized strategies.
Interesting. Ram, how about you?
Yeah. Look, I agree, by the way, Josh, always right on the mark too. So banks are reporting in 2 weeks. So I think getting ahead of earnings season is a good idea. We know mortgage refi picked up. There are a lot of ways to express a view on that. Wells Fargo is a leading mortgage originator. It looks set up well too. But I think the broad base of financials will report and they will crush earnings. Austin also spent a lot of time at banks, and every quarter these banks just crush earnings. And what happens is midway after the earnings seasons has moved on to other topics, they kind of trade down again. But like the deregulatory backdrop around banks is strong. The consumer is strong. We saw GDP clock in strong. Earnings growth last quarter was strong. There's a lot of good things happening out there if you can kind of look past the doomerism. So I think that's an interesting idea, and not just tactically, but also as a strategic investment.
All right, Dr. Campbell.
So I'm going to leg on to what Josh said and say the kinds of things that quote unquote stop this train in times like now are actually unexpected, really bad breaks. Honestly, I think people are watching a lot of DeFi and prepared for that. But one of the areas where crypto has definitely not learned their lessons and continue to do stuff that we know not to do in some areas of the traditional financial system is like single point of failure risk. So if, like, understanding how sophisticated, and by sophisticated I mean incredibly sophisticated, some of the threat actors are out there in this space. The kind of thing that's going to break the crypto rally badly is like North Korea compromising like Tether Circle's smart contract. Right, just minting $1 trillion, buying all the assets and like sweeping it into Bitcoin. Because that is, I want to be clear, that's the kind of stuff they are actively trying to do right now.
Out of curiosity,
that is
why would
not a
they try to do that,
hypothetical.
since that's what they use to fund their nuclear program? Why would they?
So the answer is, if you're a truly nihilistic group of people who are only motivated by getting a big score because that's how you get whatever you want, you go do that. By the way, you'll notice the North Koreans have a strong preference to taking whatever they successfully capture and getting it into Bitcoin as quickly as possible, right? If you look at how they've swapped things cross-asset, what they exchange things for, if they get stable coins, if they get something else, they're going to swap them. And so I've banged this drum before, but I'll say it again. There's a lot more single point of failure risk in elements of DeFi than people.
So Bitcoin is the primary FX reserve for North Korea? Wow.
They don't have bank.
Yeah. So Austin, do you think we could get a private key compromise from a major party? I mean, that would be a kind of a left tail risk.
That's what I'm saying is a good example of left tail risk that can't really be.
If you had that,
because if you look,
that would end like the DATs, they would all crumble. I mean, everything would just be. It would be like the equivalent of
I'm actually speaking.
It would also end DeFi, right? Because think about it. Every blank against USDC pool is now nuked. If USDC gets compromised, all the bridges, et cetera. And that's why I raise it, because if you look at the governance structure of a lot of these chains, if that happens on like Ethereum or Solana, they functionally don't have a way to do anything about it, right? Like there may be a hand, for all that people make fun of them for being a zombie chain to raise one of Steve's previous victims. Like there are structures on like Stellar or Avalanche where you can have coordination very quickly between certain kinds of validators to stop that, but most chains are not centralized in that way.
I'm actually speaking at a quantum computing conference in I think a week and a half or so ago, which I think is kind of funny. I got
hold on, is that the one that was above the bodega?
the what?
I was like, was that at the headquarters that was above the bodega?
And I always think it's kind of funny because I think you got a C in computer science at my freshman year at Carnegie Mellon, but
it's hedge for crypto, right? Like if they crack quantum computing, your quantum stocks will go through the roof. Your Bitcoin.
Yeah, but like if they crack that,
terrible idea, by the way.
And they can like compromise like private keys, like that's going to end like all privacy, like finance, TradFi, crypto, everything. So DeFi will be the least of our problems. For me, I guess just the last thing. I saw a couple of announcements today. I think like the Winklevoss twins put money into a DAT. Like I've still seen a couple of like smaller announcements on DATs, and I'm really curious like especially for ones that aren't like associated with like a long tail asset, which I'm already pretty bearish on. I'm really curious, like what's the thought process behind some of those at this point? But like Nav's.
Okay, hold on. Pay attention to how people are contributing to those, because one of the things driving the DAT proliferation is, as is always the case in all markets, tax arb, right? Because if I've got Bitcoin with a very low cost basis, I could contribute it to a DAT in kind, get shares back, and go borrow against those shares from sources that I can't borrow against in crypto. So that's a very favorable trade for some people, where they're not really expressing an opinion on anything other than I don't like taxes.
Yeah, and I guess with the assumption that the premiums won't drop below 1 or through.
It does. It's not that it won't drop below 1. It's just that it needs to not go so far that you get liquidated on the loan. And sort of given the fact that if you are a shareholder, you can be your own activist in some ways, that seems pretty doable.
Otherwise, we didn't get a chance to talk about it today, but obviously Grayscale started launching staking for their Ether and Solana ETFs. I'm not a lawyer. Austin, are you a lawyer? I'm not sure. You have so many. You have this professorial look. I almost assume you are. But no, we got to get James back
on TV.
But we're going to, I think we all expect in a couple of weeks, we're going to see a lot of staking come to ETFs, and we're going to have to discuss what that means for the market, but also especially for DATs, especially like ETH and Solana DATs, because their hurdle rate, I think, quote unquote, is about to get a lot higher. But with that, thanks, Josh, for joining us. We'll definitely have to have you back, Ram and Austin, as always. Thanks, everybody, for watching and listening. And we'll be back next week with another episode of Bits and Bips. All right, that's it for this week's episode of Bits and Bips. Now, for the second half of our double feature, we're turning the spotlight on the Onchained 5. I sat down with Ryan Yee, who authored a 3-part series for Unchained, laying out the 5 companies that are quietly leading the next wave of crypto adoption. Here's our conversation, and remember, you can find all of these articles in the show notes. Don't forget to subscribe to our newsletter.
As these bets start to pan out across these 5 companies, it's going to become clear to the world and a lot of the other tech companies that it's actually table stakes to have a crypto forward strategy and an on-chain strategy. And if you don't, you're going to be left behind.
Hi, everyone. Good afternoon. My name is Steve Ehrlich. I'm executive editor here at Unchained, and I am with Ryan Yee. Ryan wrote a terrific series of articles for us called the Onchained 5, and we're going to share them with you and break down some of his key conclusions. But before that, Ryan, hello, welcome, and why don't you just briefly introduce yourself to the audience?
Sure, thanks, Stephen. Yeah, my name is Ryan, been on the show before, but just a quick background is started mostly as a crypto investor, so spent some time at CoinFund as a venture investor there, and then most recently was over at Coinbase Ventures, building out their investment practice.
Okay, great. So why don't we just start with sort of the origins of this project? I mean, why did you decide to sort of like list out what you kind of saw as the Unchained 5? I mean, the 5 companies that are really going to define sort of the next level of adoption in crypto. And in your first article, one of the things he wrote was that distribution is going to really be the defining variable given where crypto is in its current level of adoption. walk us through that, please.
Yeah, sure. So I think a lot of the genesis of this was just based on my observations while I was over at Coinbase. What became sort of clear to me was that there are kind of two things. One is there's massive sort of leverage that is created when a centralized company actually uses on-chain technology. And so, one of the largest products at Coinbase is USDC, which is a USDC stablecoin. And it's one of the largest sort of money generators in crypto. But that is not built by a decentralized team or a decentralized product, right? That is built by a centralized team, effectively issuing a product that is used by the entire crypto ecosystem. And so I think one truth was that there's massive leverage of centralized companies using decentralized technology. And then I think secondly, it kind of became clear as, I was talking to a lot of startups in the ecosystem, who wanted to chat with Coinbase and the Coinbase Ventures team, that they really wanted to know how to learn how to sort of have our users and have our services interact with their protocols and decentralized technology. And so I think the combination of those two things kind of really led me to this belief of, I think there's going to be this era where companies are going to start to really invest into on-chain products, especially the big companies that already have users and liquidity and partners. And so the thinking then expanded into, hey, obviously I'm very familiar with that, where sort of Coinbase and Base are going to go. What does this mean for sort of the broader ecosystem? And I think as I was thinking through this, a lot of the news around Robinhood and Stripe and a lot of these others started to come out. And so I figured, hey, maybe this deserves its own piece of literature and we should explore this.
Yeah, that makes a lot of sense, and certainly seems appropriate given sort of the support crypto's getting in Washington D.C. and as well. I guess just this unprecedented level of attention that is being heaped on the space, especially from some of those big, I don't know if TradFi is the right word, but maybe like traditional fintech companies, if that's not a misnomer. So it certainly makes a lot of sense. Let's dive in each one to just sort of explain the thought process and some of your key takeaways from the companies. I mean, you did a nice job in the articles of providing an overview of sort of their strategy so far, how they're trying to leverage blockchain technology in different ways. That's one of the things I liked about the article. Every company is using crypto and blockchain in a different manner, and then you also highlight some risks associated with each company too, on why they may not fulfill those expectations. Let's begin with Coinbase. Everyone listening here, I'm sure, has heard of them. They are the largest U.S. exchange. They're a massive custodian. I think you call them like Uncle Sam's on-ramp because of this sort of pristine type of image that is created for itself. But beneath the surface of its massive centralized trading platform and custodian system, or custody system, I'm sorry, is Base. Their proprietary level 2 blockchain that you sort of explained is going to be a launchpad for a whole ecosystem of financial services. So talk about that, please.
Yeah, sure. So I think it's important to understand what Coinbase was before Base. So, Coinbase is effectively a centralized financial services company for the crypto ecosystem. And so what that effectively meant is that a lot of the sort of crypto utility that Coinbase was allowing its consumers to actually interact with was mostly through trading, as well as custody and related sort of products like that. But I think if you look at sort of the vision and the mission of where Coinbase is trying to go, I think they really do believe that there's a lot of different sorts of actions and ways in which consumers are going to be interacting with crypto. And so this might be called things like crypto utility, things like, crypto as applications and so forth. And so I think, that genesis of Base really makes sense in that context because it allows Coinbase to have its own platform where it can really drive its users to interact with this technology, but they can also invest into making it as seamless as possible for the sort of existing Coinbase user base to interact with on-chain technology, which, as we all know, can kind of be a little bit cumbersome and scary if you're not sort of working in this industry full time. And so, they've gone on this journey now. I think the experiment is definitely working. But I think the core question I was asking myself is, what does Onchain uniquely solve for Coinbase in this aspect? And I think the biggest takeaway for me, at least, is that it really helps them scale this concept of financial services that would otherwise be a little bit, not scalable or just, a headache to deal with because on-chain technology is actually a much better alternative compared to trying to build this out in maybe the centralized off-chain closed source kind of way. And so, I've highlighted a couple of examples of products, whether that's, Bitcoin-backed loans. They obviously announced crypto lending recently for USDC. And then I think they also announced DEX trading. But the core idea of this is effectively that, Coinbase doesn't actually have to, through its own infrastructure, build the liquidity for all of these services. They can actually bootstrap and use a lot of the liquidity that exists on chain and basically use these protocols or interact with these protocols that have that, basically the hard job of bringing the liquidity and managing all those things. And then Coinbase effectively just provides a simple front end and a service for users that want to interact with these types of products.
Got it. So two things from Coinbase that you raised in the article I want to ask about. For one, for years, the company had maintained its stance that there was going to be no base token. That's obviously now changing. And it also coincides with sort of, I guess, a reimagination of their non-custodial app Base into, I guess, what they want to be like a full-fledged, like all-in-one financial super app. Is there a relationship between the announcement of the token and this app, or have you had a chance to play with the app? I know that its waiting list is, I believe, over 1 million people long, so it's pretty massive. And what might all of that do for an L2 that is growing, but still does not meaningfully impact Coinbase's bottom line financially?
Yeah, so I think these things are definitely related. So the way that I would think about sort of the app and the token, and also just like the general Coinbase interface, is in 3 ways. So I think in the general Coinbase interface, there's products that they are launching which still feel very much like typical financial services that a consumer would use on top of like the traditional Coinbase.com. So things like loans, things like lending, things like trading. But it's just on-chain, on Base, that is powering a lot of those things right now for them. So I'll put that as, an existing user on Coinbase is familiar with that type of products and wants to access those things. It's just Coinbase finds that using on-chain on the back end is just a much more efficient way of doing that. I think the second thing is, the wallet app, TBA. I think that's meant for effectively any user that wants to interact on-chain on top of Base. So you don't necessarily need to be a Coinbase user. You can be, anybody that has access to an iPhone or the iOS store or the Android store. And, effectively you could download this app and start playing with things on-chain. And so this type of utility or types of applications that you might want to interact with on top of Base, I would imagine that this is probably the right consumer application for that type of consumer behavior. Although you probably still interact with a lot of the DeFi things that are on top of Base through that app as well. And so I view that as almost as a customer acquisition funnel and a user funnel. And then I think the token is quite interesting. There's not too many details out there, obviously, yet. And I think I recorded an episode with Unchained maybe a couple of weeks ago, kind of giving my thoughts on that specifically. So if people want to hear more there, they should listen to that one. But I view that as kind of the way in which you can get a lot more attention on the developer side and generally on the user side to start doing transactions and play things on Base, especially if there's a potential sort of reward or incentive structure in the future.
Got it. Thanks for that. Before we move to our next company, we just need to take a very quick break to hear from the sponsors who make this show possible.
Over 3.4 billion transactions processed without disruption. More than $1 billion in stablecoins circulating. Over $720 million in real-world assets tokenized on-chain. All delivered with sub-second finality, block times under 100 milliseconds, and fees less than 1/10 of a cent, making Aptos more than 100 times cheaper than other leading blockchains. Built by the team behind the DM project at Meta, Aptos is what blockchain performance looks like when it's built for global financial markets. Discover why global institutions like BlackRock, Franklin Templeton, and NBC Universal are building on Aptos, and see for yourself at the Aptos Experience, October 15th to 16th in Brooklyn.
All right, so we're back. Company number 2 that you listed, and I think it's important just to remind our listeners and viewers that there's no particular order to this list. It's not like Coinbase is number 1 and so on and so forth. It's top 5, or I guess 5 unranked. But the second company that you profiled is Robinhood. And some of the statistics for Robinhood were pretty eye-popping. I mean, for one, when you published this particular story, I guess maybe 2 weeks ago or so, the stock was up 400% year to date, over 400%. And the vast majority of that, I think, comes from excitement over crypto and crypto trading. I mean, Robinhood had its start as sort of just focused on TradFi and payment for order flow and meme stocks, etc. But it's very much a crypto company. And now it's leaning into that identity even further. So why don't you walk us through some of your key findings with Robinhood?
Yeah, I think Robinhood's view is that it's kind of two ways, right? So I think one is competing as basically a traditional crypto exchange. So they continue to list crypto assets on top of Robinhood that people can trade. They also acquired Bitstamp over in Europe to effectively allow European liquidity to form, and Bitstamp is a European crypto exchange. And so I think in that way, I think about a very in traditional terms of them competing with, the Coinbase centralized exchange products, right? And so I imagine that, they're continuing to invest more because it's a much bigger driver of growth for the business now than it was before. But I think all the other things are much more sort of medium term and into the future, which is really sort of leveraging on-chain technology as a better backbone for the types of financial services that they want to offer in the future. Right. And so, if you open up Robinhood today, they actually offer a ton of financial services that, would look very similar to like a traditional financial product. So things like options, things like, pre-IPO products, things like secondary trading. I believe they even listed prediction markets. Like I was at the Ryder Cup a couple weeks ago, and I could bet on the outcome of the Ryder Cup through Robinhood, and it was powered by Kalshi, which is another prediction market company. What's been interesting about that is, as you are trying to offer these different types of financial services, you just tend to increase the level of complexity of the infrastructure that you actually need to build to service those things, whether that's partnering with external market makers or strategic partners, or whether it's literally just like an internal financial system that you're relying on in the traditional rails that may make that thing, actually hard to actually manage at scale over time. And so, when I saw their announcement around Robinhood and their tokenized stock and their stock tokens, I think that was kind of their way of saying, hey, like this might actually be a better back end for the types of products that we may actually want to offer in the future, but consumers are not going to really know the difference at the end of the day. Right. And so a consumer will still be able to do things like, hey, I bought this stock. Maybe I want to do stock lending. There's a traditional way of doing that, but the crypto native way of doing that is, we just wrap this, we tokenize it, and then we stick it into some DeFi protocol on top of Robinhood chain. Right. And so it begins to form this sort of long-term vision of how Robinhood chain actually becomes this settlement layer that is actually much more efficient in terms of allowing the types of financial services that Robinhood actually wants to offer in the near future. And I think what that then does is it could potentially sort of impact a relationship that Robinhood has with their intermediaries and other people like broker dealers and market makers to then sort of cohesively move into this one ecosystem and create more sort of interesting and creative ways in which they might work together.
Yeah. One question that immediately came to mind, and I know you discussed it in your story, is what does all of this mean for the future of PFOF, payment for order flow, which is how Robinhood built its business? I mean, I guess if they're able to tokenize stocks and put them onto an ultra-fast L2 on top of Arbitrum, is there the same need for them to rely on the Citadels and Susquehannas of the world? Because PFOF is certainly a controversial practice.
Yeah, I almost think of it like, if I had to use crypto native terminology, like, the traditional way of them doing this is that they effectively generate some flows on the user side, and then they effectively sell this privately to different market makers and partners that they have. And they monetize in that way, and therefore they're able to offer zero commission trading for their users. I think the way that PFOF might sort of transition into the future is that, that basically just gets baked into the economics of Robinhood Chain, right? And so, it could actually turn out that, traditional words that we use like, MEV and the mempool and things like that, I almost view that as just like the crypto native version of a PFOF. And so you can imagine a world where all sort of trading and all sort of tokenized assets begin to move into Robinhood Chain. All of their partners start to do market making and actually play with these on-chain financial services, much of what they're already doing anyway for Robinhood users. It's just like one step sort of detached. And then through that, maybe Robinhood starts to experiment with, hey, like maybe you pay us like a subscription fee to actually sit and be one of the validators on Robinhood Chain. And then that effectively is a form of like buying a seat to order flow. It's just that order flow is represented in some technical fashion that looks like something like an MEV or something like that, right? And so I think these are much more sort of conceptual ideas. I kind of want to wait and see like what's going to happen in practice. But to me, that seems to be like a potential natural evolution of their business model.
Yeah, that's interesting. I mean, the idea of them almost paying to be like a validator, I guess a sequencer in like L2 nomenclature. Although the ironic thing is that, as far as I can tell, basically every major L2 is fully centralized at this point, even Base, with just a single sequencer operating it. So I think a lot of the hope for Base and I guess Robinhood, the aspirations are reliant on actually decentralizing these networks over time. Just one more quickly on Robinhood before we move on. There are lots of numbers being thrown around about the potential size of the tokenization market, billions and billions and potentially trillions. And I wonder, where do you see the real low-hanging fruit or the sweet spot for Robinhood? I mean, they can tokenize stocks of Apple and Tesla, but those are already pretty liquid markets. I know companies have been trying to offer access to like tokenized private equities for years. Robinhood got into a little bit of hot water with derivatives that quote unquote track the price of OpenAI and SpaceX. What do you see?
Yeah, I really think it's three things. So one is, I think, yield offerings. So, I think through, stable coins and related products like that, I could see, Robinhood. I think they offer some version of this already, but effectively using Onchain to offer a better version of that seems like very low hanging fruit to me. What's been kind of interesting to me is like that secondaries market, so that pre-IPO market. I think actually Robinhood today does offer the ability for users to participate in IPOs. Obviously, like it gets super filled, and like the amount that people want, it's almost never the size that they're looking for. But it kind of goes to show you that I think the private markets are, there's just so much money behind a lot of these companies. Obviously, all the AI companies minus NVIDIA are all private right now, and so that's definitely like a hot area currently. And I know that retail definitely wants to participate in that. I think the OpenAI stock token thing, there's some news around it, but I think conceptually it's the right idea, because I do think that is a product that users probably want to interact with. And so I'd imagine those are the two things. I would say long term, it would be interesting to see sort of how they start to meld different types of traditional financial assets with like, crypto style products. So can you build sort of perpetual futures or perps products for, things that look like traditional assets and things like that?
Got it. Okay, so let's move on to, I guess, I don't know if controversial is the right word, but I think the one company that has certainly gotten the most conversation going in the last few weeks or months, Stripe. And the news that Stripe was going to create, or I guess it has already created its own blockchain, Tempo, that's really designed to be focused on stablecoins. This fits into like a broader, I guess, movement of stablecoin companies or payments companies launching their own blockchains. I mean, Tether's kind of doing the same thing. Circle's launching its own blockchain, but Stripe, because of its massive scale and network effects, launching their own chain, is forcing people to pay attention. So just briefly, in case there are some people who aren't familiar with the Stripe business model, can you explain exactly how they process payments and what they're looking to do with a new, I guess, vertically integrated blockchain tech stack?
Sure. Yeah. So, if you're an online business today, or even an offline business, but generally speaking, an online business, I think it's pretty if you ask every one of them, like probably 9 out of 10 of them are using Stripe. And so, the way I look at it is that Stripe effectively is a payment processor, especially for these sort of online native companies. And, they've been building this for many, many years now, and they've built like this huge scale. But if you look at all the sort of infrastructure that they're running on, it's all legacy style products, right? And so they still rely on partner banks. They still rely on, credit card partners and all of these things. And so if you're a company that's on Stripe's platform, I think that, in terms of like money sort of in, money out, you can use that on Stripe. But any other sort of financial service, like whether it's like capital management, balance sheet management, other sorts of services that they might want to offer, they probably need to go and use a bank or use one of these other people in terms of their sort of traditional sort of business workflow. And so what's been interesting about Stripe is that, there's a graphic and it's part of the article series, but if you look at all the bets that they have made, they're effectively trying to tackle all the areas where they could basically bring these things on chain and effectively have businesses never actually leave the Stripe product or the Stripe network. And so, those 3 bets are effectively, privy. So do we have a wallet layer for effectively businesses to hold assets like stable coins or otherwise? B is, do we have basically a layer that is able to map sort of off-ramping and on-ramping into crypto and into banks? I would basically say Bridge is the infrastructure that allows for that thing. And then third is, do we have a native chain that we have that is, purpose-built for our use case, which seems to be payments? And that's why, they're incubating a project like Tempo right now. And so it seems to me like they're making these sort of 3 different bets, which, if you sort of tie the strategic vision of how these 3 things fit into, you can almost view this future world where Stripe sort of is running on chain. And it's just a much more an efficient way for them to actually grow, but also offer a better product experience for their customers, and then actually get much better margins through offering new types of products and not just being kind of one person within the flow of traditional payments flow.
I think one question that immediately comes to mind, especially you talked about the acquisition of Bridge, which I think at the time was the biggest acquisition in the history of crypto, 1.1 billion or something like that. Many people associate it with sort of being a white label stablecoin provider or launchpad. So companies on Stripe's platform can launch their own stablecoins. But given how profitable stablecoins are as a business, all you have to do is look at Tether's profitability, Circle's gangbuster IPO. The question everyone's going to have is Stripe going to launch its own token? And if it does, what does it mean for all these other companies on the network that might be thinking of doing the same?
Yeah, so I think they announced something last week called Open Issuance. Maybe I'm getting the name wrong, but effectively this is exactly that tool where basically if you are on top of Stripe, it's effectively a one-click experience where you can effectively issue your own stablecoin. And the benefit is clear. It's like, you can generate yield. You can do all sorts of things that, the benefits that stablecoins effectively bring to your business. And so I think that's very much in line with how sort of Stripe's, business and product DNA is reflective of, which is, hey, can we offer this experience to our customers, which is effectively one click and giving them everything that they need in a box, right? And so I think my view is like that is a very smart strategy because it effectively allows their customers and their businesses to start to understand the benefits of Onchain. Whether Stripe launches its own stablecoin or not, I think is a TBD question. I don't think they need to, because I think there is a world here where you have all of their merchants effectively issuing their own stablecoins through Stripe, but those stablecoins effectively get issued as assets on top of their own blockchain, Tempo, which they already own in terms of the stack, right? And so I could see a more probable future here where they have their own chain, which is Tempo, and then all of their partners that are issuing stablecoins are issuing stablecoins on top of their chain. And I think that's probably a much more interesting model for them, because then they don't have to actually introduce their own currency and potentially be perceived as like having conflict of interest with all the clients that are on their platform right now.
Yeah, that makes a lot of sense. And I guess also maybe it comes down to the negotiation of these agreements. I'm sure with the ease of a one-click issuance, there is probably some sort of management fee, et cetera, that will go back to Stripe, as compensation for doing that. And then, I mean, same thing too. They announced a partnership with Coinbase and Base to allow merchants to accept USDC from Base too. I don't know. I would imagine they're probably not doing that for free, or maybe now they're not going to be doing it for free for much longer, because I don't think they get any money from Base and the yield. I'm sorry, from USDC and the yield generated from it. So it will be interesting to see. But that idea of sort of being a neutral party, I know that's something that Tether values, Circle values it as well. And when we talk about a lot of the big Wall Street banks potentially issuing their own tokens, their own stable coins, they're going to have to sort of deflect that narrative. So that certainly makes sense with what you're saying. Okay, let's move to the next one. I found this particularly interesting because I wasn't very read up on the finances of Telegram, but the company you mentioned was Telegram, very closely associated with the TON network and the TON token. And this one was particularly fascinating to me because you made the argument that the TON token is really a financial necessity for the company to keep moving forward. So why don't you just walk us through that before we get into everything that they're trying to do to build a whole developer ecosystem on top of TON?
Yeah, so I think where the core of this came from is Telegram is a very unique asset, I think, among tech companies because number one, most of their users are not in the US, right? So it's primarily an international product. Obviously, folks in crypto and the crypto ecosystem are super familiar with Telegram, but if you ask most people like in the US, like they actually don't use Telegram, right? And so I think there's this interesting sort of geographic aspect where Telegram is really huge, but it's huge in places that maybe typically in Western economies, they might not be realize how big it is, right? And so it's a huge asset. I think it's like 1 billion monthly active users. I think the second unique thing about Telegram is that it is kind of like a non-traditional tech company in the sense where they haven't really done that traditional sort of life cycle of raising equity, growing, creating profits, creating revenues. Like I think a lot of those questions have basically been kind of delayed because they were so focused on building a product that is very in line with like the founder's philosophy, right? And so, if you see interviews with Pavel and how he kind of talks about his own views of like freedom and things like that, it's very clear that he wanted to create a product that was kind of different, right? And didn't really rely on that sort of traditional monetization model where he's basically making money off people's data and things like that. Because I think that's basically what he believes in, which I think is, that's what he believes in. And I think that's great. But it does come at the cost of sort of running a traditional business model. And also it does come at the cost of kind of going through a traditional financing life cycle and process. And so, if you look at sort of Telegram's financial situation now, there's really two things to pay attention to. One is that they only started to really generate revenue in like the past 2 years, right? And so, things like Telegram subscriptions, things through gifts, different ways like they're experimenting with. And I think they've like generated like a decent amount of revenue, but this is something that needs to grow over time. And then the other is like the cost structure, right? So running Telegram, running servers for 1 billion people, like that costs a lot of money. And so how do you sort of finance that? I think to date, they've basically raised money through debt vehicles from different sovereign wealth funds to basically manage that, right? And so they're kind of in this game where they raise a bunch of debt to make sure the company is, and the product is continuing to run. Yet at the same time, they also are starting to experiment with monetization. And I think there's always going to be some delay in which like how much they can actually basically meet their cost of financing while also driving growth and value back into the Telegram ecosystem. And so, I think the TON token is extremely interesting because it offers them kind of an alternative path where it kind of can address both of those things, right? So on one side, if you have, TON tokens on the balance sheet, obviously you can use that as a financial lifeline and, use that as a way to basically finance yourself and your operations. At the same time, I think there are also interesting ways in which you can start to implement Ton as sort of this growth driver and value driver within the Telegram ecosystem, which is the other sort of thing that they've been doing on the side. And so, I think Telegram's a really interesting company because, the founder has his own views on sort of freedom and his own philosophy there. And it almost makes perfect sense that, he is looking at crypto and tokens as like, one of the paths that is actually aligned with how he wants to view like the outcome of his company, where he doesn't necessarily have to rely on sort of the traditional rails and the traditional, sort of capital markets for the business that he's trying to create.
Yeah, it's really interesting. I mean, I actually got first involved in crypto 10 plus years ago. The first story I ever wrote was about how blockchain technology could help companies better align with like what was at the time forthcoming European data protection laws. And as I've chronicled a lot of different companies along the years, I mean, talking about like Zcash or NIM, private payments or private VPN, et cetera, the monetization problem has always been a problem. These are projects that perfectly blunt, I root for, but at the same time, like their token struggle, usage is very low. I mean, Zcash, the vast majority of transactions on Zcash don't use their shielded addresses, which is the whole point of Zcash. And NIM has been trying for years. So I mean, Ton doesn't offer the same level, or Telegram doesn't offer the same level of privacy as those products, but it is still in that privacy family. And so I can appreciate the financial struggles with something like that. And it is interesting and pretty clever for them because they, unlike those other products, they have the brand recognition to really leverage a global user base to try to generate lots of funds. Two questions I had before we move on to the last company, though. In what has been a pretty bullish year for crypto, the Ton token has not had a good year. I think when you wrote the story, its token was down somewhere 40 to 50% year to date. I'd love to just kind of get a thought from you as to why and what that might signify. And then two, if there's anything that I know you pointed to a couple of examples in your story about some activities happening on Ton that you're pretty bullish on. Many people who just casually follow the blockchain might only think of Ton or the Ton network as sort of the place for those push to earn games that were that were kind of had a fad moment maybe a year or two ago. I forget exactly if it was 23 or 24, but can you just briefly address that?
Yeah, I mean, I'm not, I don't know like the story of every day or every week of what happens in the token, but my theory is a couple of things. So I think one is, somebody was asking me what percentage of Telegram users are actively using on-chain applications. And I actually don't know what that number is. And my guess is that that's still quite minimal right now. I don't know what the number is, but let's just say it's like 5 to 10%. And so what that really means is that, the majority of the Telegram user base has not actually sort of contributed yet towards usage that is translated on top of any of the stats that is running on the Ton network, right? And so I think that's probably one thing. The second is, there's kind of this feeling of, when you have a major asset like that, how much of the present value is baking in the growth or expectations that Telegram is already backing this thing versus how much of that growth do you actually need to actually demonstrate, right? And so that's kind of related to the first point. And then I think lastly too, it's like, what is the average revenue, right, per user on Telegram on top of Ton? So, if you think about a lot of where Telegram might be downloaded and being used for, maybe there's a lot of these geographies which don't actually have a ton of wealth that they're putting on chain on top of Ton through Telegram yet. And so I think there's that aspect where, okay, great, we're getting, 1 billion plus users, like we have a path towards like bringing them all on chain, but how valuable is each user on top of Ton, I think is also an open question mark. And so, I think those are probably the main reasons. But I'd be happy to hear from the community what they think about that.
Time to talk about our fifth and final company on the list, Binance. So with Binance, I think there's two big threads to briefly unpack here. One, it is by far the world's largest cryptocurrency exchange, and with that comes just a lot of distribution value. I don't have, excuse me, I don't have to explain why. But two, the company also has enjoyed, I guess, a renaissance of sort under the new Trump administration. And so I'd like to just maybe start there. I mean, Ryan, when go back a year and a half ago or so, I mean, their founder had to step down from the company. He was in prison for a few months. The company still continued to pace and continued to grow, but now it's entirely new world, especially coming from Washington, D.C. What does that mean for a company of Binance's size that has already engendered a terrific and I guess a terrific brand loyalty and a global user base?
Yeah, I mean, I think generally speaking, the regulatory climate in the U.S. has definitely become a lot more positive, compared to sort of the previous administration. And so I think that's just like a general macro factor that has, benefited the entire industry, whether it's Binance or whether it's like another company.
Okay. So, but then the other big point that you hit on with your article is the role that BNB plays. A lot of people listening here probably own BNB. They're aware of its usage when it comes to getting certain like trading privileges, fee discounts, early access to programs and investment opportunities, etc. But one of the things that you revealed in your story is that it's much bigger than that. And in this, and what you really tried to focus on was highlighting how it's not just like a financial driver for Binance when it comes to quarterly burns, etc., but that like there's something unique about how BNB fits into the Binance ecosystem and the BNB Smart Chain ecosystem that is difficult to replicate. So why don't you just walk us through that?
Sure. So, it's so interesting because BNB is a top 5 crypto asset. So it's the 5th biggest token in the world. I think people forget that sometimes. Like this is huge. It's really, really big.
I think it's over $1,200 now. I mean,
yeah.
Setting record highs when you publish this a week and a half ago,
right?
About short of 1,100 now. It keeps going up.
Yeah. I think when I look at BNB, I almost view them as like the final boss of tokens in a way. Like, if you see, okay, so there's all this movement, right? Like, Base wants to launch a token, and maybe Stripe's Tempo is going to launch a token one day. And I think in general, a lot of people are like, okay, like, there are the fundamentals of the product, but how do you relate that to the value of the token? And I think what's been very interesting to see is Binance obviously has the fundamentals of a product down, right? They're one of the oldest and they're the richest crypto company in the world. But I think also they've been able to bake a lot of that sort of value back into the token, whether that's through, all the things like profit, fee sharing, all that kind of stuff. And if you think about that, it's like, oh, that's probably the future of like most tokens in the industry. It's just that we haven't had a big company like that actually be willing to like make that bet and actually have the level of scale and the fundamentals to actually drive the value back into the token. And so, when people ask me, oh, what do you think the Base token might look like? Or what do you think Stripe's token might look like? I mean, my view is I'm like, just look at what BNB has done, right? Like effectively they have kind of created the playbook. But people have like, I don't know if, people have forgotten or like, they just like, don't look at it as like sort of a investable asset because it's so big now. But I view that as like, no, this is actually probably the model for like how a lot of tokens are going to look like. And a lot of people are talking to me like, hey, like, it feels like there's a whole narrative like RWAs, right? Like people effectively putting off-chain assets, tokenizing them and putting them on-chain like a stable coin. And so, they're saying, oh, equities are going to become tokenized. But my view is actually maybe the real innovation here that we're seeing is that tokens actually are going to look a lot more like equities, right? They're going to have some sort of value ownership. There's going to be a lot of things that you can do with this token that you can't actually do in traditional equity land. Like things like, interacting with the products on top of the platform, actually investing in ownership of your community and things like that. And so, I think BNB to me is quite interesting because effectively I view it as like their IPO or like that's the thing I would hold to basically have ownership in Binance's future as a user. And if you think about it now with all these ETFs happening, like, the Bitcoin ETF or the ETH ETF, any of these like ETPs or even like the digital asset treasury structures, you can almost see a world where actually, it might make sense in the future where you launch a token, the token has, value flows related to the product, and then you can now wrap this into this equity structure. And that is effectively the form in which a crypto company can go public. Now, they can obviously go the traditional path of like doing the IPO and, the way that Coinbase has done it. But there's almost this like alternative path now to effectively like the same outcome, in my opinion. And so it's going to be quite interesting where people are like, oh, like what if Binance ever went public? And I'm like, I don't think that's going to happen. Like the way it's going to happen is basically you have BNB token, which is effectively, the stock or the thing that I would own. And then you just wrap that into the equity market structure and then, have that trade. And that's effectively the win-win outcome if you're buying it.
Yeah, the BNB token, it's really fascinating for a number of reasons. And you discussed this in your story. It's almost like it's an equity-like token because it doesn't confer any of the privileges, benefits, or protections, frankly, that come from actual equity. But for a company like Binance that funded itself through an ICO, I think back in 2017, was it? That's and you said they're already so profitable and their holdings are so concentrated. There's really not much of a need for them ever to do IPO. This could be the next best thing, and the investments that they've taken, I think from that investment group in the Middle East, it's really more for strategic reasons to open up certain avenues for partnerships, et cetera, as opposed to a company like Telegram that needed to raise that money to secure its own financial future. So there's a very unique mix of factors and circumstances that I think help BNB remain so buoyant, especially in a world where people see it as sort of stock in Binance when it's not. I mean, it's probably in some ways maybe like the best possible version of what XRP could mean for Ripple, where people buy XRP off because they want exposure to Ripple, but obviously it's very different from Ripple stock. So we're at the end here. I want to wrap up, but Ryan, before I let you go, just wanted to give you a chance to reflect on any just key learnings that you had from looking at these 5 companies. If there's any close misses that you just want to highlight, or if you have any ideas for future research, additional questions that you want to explore as a result of doing this work.
We're definitely entering into a different phase of crypto now, because I think that, ever since sort of Ethereum came out, I feel like as an industry, we've basically like thrown a ton of darts at the board to see what's going to stick and what isn't. And let's say we threw 100 and like maybe 5 to 10 of those things have worked. And what I'm noticing now is I think the companies understand the actual value and the benefit of these 5 to 10 things from a business strategy perspective. And so now I think you're going to start to see really the benefit of Onchain demonstrated in a big way, because a lot of everyday users and a lot of these big companies are going to be benefiting from that. And so I think that's generally a very bullish thing, because I think the amount of user count, the amount of transactions, just the amount of the on-chain economy and what's being powered through it is just going to be like exponential over the next couple of years. I think that's an awesome thing. I think the question then is going to become, who are the companies that haven't done this thing yet, right? So, we have 5 companies that we talked about, but what are the companies that haven't actually explored an on-chain strategy yet, which could actually be very, very interesting? And I have some thoughts in my head. I actually think like Twitter or X could be a very interesting company. Sort of looking at a lot of what's happening on the social, financial side of things in the crypto ecosystem, I could see X actually start to like potentially have a crypto strategy when it relates to that as well. And so I always ask myself, what is the crypto strategy of the next biggest company that wants to enter crypto? And what is that going to look like? Because my bet is that as these bets start to pan out across these 5 companies, it's going to become clear to the world and a lot of the other tech companies that it's actually table stakes to have a crypto forward strategy and an on-chain strategy. And if you don't, you're going to be left behind, right? A lot of the similar conversations happening in AI right now, right? Like all the tech companies are like, oh, what are we doing in AI? We got to have an AI strategy. I think the inevitable outcome here is probably going to be the same, but for crypto, right? Companies being like, oh, what's our on-chain strategy? What's our crypto strategy going to be? And, as that pans out over time, and then in the long term, you can kind of see crypto really powering like a lot of things in the world. And, that's kind of like the vision of why at least I'm working in the industry. And so I think these are really exciting times because, in 2018, 2017, people were talking about enterprise blockchain, if you remember. But I don't think the industry was ready for that. But fast forward sort of 7 to 8 years, I think we're actually seeing happening it now for real, which makes me extremely bullish for where we're going as an industry.
Great. All right. Well, I think that's a great way to wrap up. We look forward to the next list of Onchain 5 and see what might change, what stays the same. So thanks everyone, and thanks again Ryan for the series and for joining us today on Unchained.
Thanks, Stephen.